Welcome to the market analysis for August, what is it? August 2nd. Things have shifted a lot, so we're going to start doing these again. So right now, we are in what we call the spring of crypto. And we've looked at this market in terms of seasons. Remember, spring is where you start to plant properly. So now is the time to start. So the macro is shifting, which means the bigger picture of money is shifting in a way that is signaling that we're there. The business cycle is starting to turn around. The liquidity is starting to slowly return into the markets, and we're going to show you where it's coming from and a lot more details around that. Governments will be forced to print. That's been confirmed now. Governments have already done it before, but now they're finding new excuses to print money, and places like China have started doing it early, which is another early signal. And in the background, adoption is happening for these technologies at a scale we've never seen before. So if you're interested to learn about all that, stay tuned. We're going to give you a lot more details on that. So before we dive into things, it's important to remember that this market, especially crypto, comes in these waves, right? So we've now been through the winter, which you've probably been experiencing, and it probably hurt a lot. And if you've made it to this point and you're listening to this talk, you are one of the few people that's actually engaged at the right time, because winter is when you want to hunker down and go inside and not worry about this market. Definitely don't, pull out all the plants that you had from last season during winter. Spring is where I like to start paying attention to this market, because spring is when we start to plant the seeds that we're going to harvest during our summer and fall type seasons. So that's where we are today. Okay. That's with a background where governments are being forced to print money. And money is called liquidity for a reason. Liquidity is the entire game. The more money they print and put into the broader ocean of the financial world, the more of that liquidity ends up in the little puddle called crypto. If you haven't heard about this before, we've spoken about it ad nauseum, so I'm not going to go into too many details. At the same time, the regulators across the world are clarifying the regulatory landscape. So the Ripple lawsuit was a big piece of that, where Ripple won, and that gives regulatory clarity to XRP. The regulations that have been announced globally are a huge piece of that, because it's starting to clarify the regulatory landscape in a way that institutions can be sure that they can set up and not violate regulations. Indonesia recently made an amazing announcement that they're keeping crypto as a commodity, which means crypto is not a security in Indonesia, all of crypto. They've created a central exchange, an Indonesian government central exchange that is going to trade crypto the same way we trade rice or corn or gold, which means Indonesia has now become one of the best regulatory landscapes for the creation of new projects. That's also why we're here. Now, in the returning of this liquidity, up until last year, we were just watching how much money was being printed by the Fed or by the governments. We thought that was the main way that liquidity could be pumped into the markets. Since then, they've actually come up with a few different techniques for them to be able to pump liquidity into the markets. So let's take a look at that. Let's pull up this chart. So we'll go to this chart, which is the repo facility. So I'm not going to explain what it is. Please research it yourself. And again, this is not financial advice. This is financial education. This is financial edutainment, just for you to learn. But the reverse repo facility was a facility that recently gained popularity. It was recently created, but it also gained a lot of popularity recently. And effectively what it is it's a place where banks put their money to get interest on it. But in the last 2 years, we've seen this process where we saw $2.5 trillion go into that facility. So that's money that's pulled out of the economy, and it goes and sits in this facility. Now, what we're starting to see is that money is starting to flow out of that facility and into the economy itself. And that is liquidity coming into the markets. That's water coming into the ocean. There's still about $2 trillion of liquidity that's sitting in there. And this will probably go in waves, but this is a big sign of money returning back into the markets. At the same time, when the banks collapsed, the two banks collapsed, Silvergate, Silicon Valley Bank, and Silvergate Bank. When they collapsed, the Federal Reserve created another facility to give them a bunch of money, and that was the printing of money and pumping into the system. So they're getting creative of how they're pumping the money in, but they're starting to pump the money into the system. On one side, it's to save banks from collapsing. On the other side, it's creative facilities like this. But the third place that I'm really interested in is just for them to have to print the money and to pay the interest on the loans that they have. And that's where it becomes impossible for them not to do it, right? Because countries, like people, owe large amounts of money to their investors, to their lenders. Now, just the interest rate on those loans is something that they have to make sure they maintain. All of that money is never going to be paid back. But this chart is a great chart from Raoul Paul. Please make sure you follow him and watch his talks on this because he describes this in very thorough detail. He's the expert. But this is the Global Liquidity Index. This is basically a combination of a bunch of different countries collated into one visual for us to be able to see the liquidity that is being pumped into the system. As you can see, 2020, something happened. I don't know what. Maybe you know what happened. And they pumped a bunch of money into the system. We went from 12 trillion up to about 20 trillion. So 8 trillion was pumped into the system. Okay. Guess what happened to crypto? Guess what happened to the stock market? Guess what happened to everything? Those things, a lot of them, things like real estate and stocks and bonds, they didn't go up in value. They simply just tracked the growth of this money supply. So effectively, they stayed in place. Crypto is technology. So it has the privilege of actually outgrowing the growth of this balance sheet, basically. In simple terms, when they print money and pump it into the system, crypto grows way more. So effectively, it is actually making money compared to things like stocks and bonds and things. Regardless, when the money got pumped in, everything pumped. When the money spigot stopped, guess what happened to crypto? But look at what's been going on for the last little bit. We've started to see money being slowly brought in to the economy through these waves. Okay. And this is not just the Fed. This is not just looking at the US. This is looking at global liquidity. So, China, there's multiple different central banks that have started to pump liquidity into the system to save their country. But this is a great signal for us because this process is like going through this process where, you can kind of start to enter the market in a balanced way, because the next thing is there should be massive liquidity running into the markets. Because when you look at this chart, now this is my favorite chart now. This chart is showing you the orange line is how much interest the federal government owes on their debt. Okay. And this is a forward-looking indicator, but ignore that. But the point is, this is a correlation of when they need to pay more money, they print more money. Isn't that a surprise? When they have to pay a bunch of money, they print a bunch of money. Now, they haven't had to pay as much money, so they started to reduce the money supply. This is where the banks collapsed. So they printed a bunch of money to save the banks. Guess what crypto did? It pumped during that time. People think crypto is pumping because people are running to the safety of crypto compared to banks. That is a narrative that's happening in the crypto heads, but the broader world actually is just this printing of money that caused that pump to happen. Now we're starting to go down again. Now, what I like to do is I like to start entering the market during these periods. right? I'm not interested in catching the very bottom. Nobody knows what truth is. Even this chart could go wrong as it did here, right? But the point is, the you want to catch these bulls, right? And we're now at that stage where we're starting to have a bottoming in liquidity, and by the end of this year, they have to start paying more interest. And what do you think they're going to do during that process? They're going to print a bunch of money. Now, the interesting part is from 2023 until 2024, we go on a big wave of interest that the government owes, the federal government of the US owes. But then 2025, it just goes bananas. It just gets bananas. And that lines up with the narrative that I've been talking about, that many people have been talking about, that 2025 timeline would be a good time for them to block everyone from being able to actually benefit from this process. In maybe there's some kind of financial thing that happens, a black swan event that blocks out the banking system. Maybe there's a new banking system that gets implemented, maybe. But my point is their debts go through the roof like we've never seen before, and they just go parabolic, which means the money printing should go parabolic, which means currency inflation it goes parabolic. But it also means crypto should see the benefit of all of this stuff happening. Now, crypto usually moves early. At least in history, crypto moves early compared to these liquidity waves, right? So that's why, like, crypto was moving back here in 2019. And then around 2020 is where we had that big wave. So I wouldn't be surprised if crypto started to move up somewhere around the end of this year. I'm still of the belief that we're going to see some kind of crash event, and we're going to go through the detail around that. But that does not mean that we don't buy, right? Between now and then, to start to buy is a good idea. And then when the crash happens, if the crash happens, you buy. Otherwise, you've been buying some really good prices. So this chart is telling you a million things. Please go and watch Raul Paul's talk on this. I've sent it in the group. That'll give you a lot more details about how the liquidity works. And even his thesis is simple. He calls it the everything code. And it says that everything is tied to liquidity. The more money in the system, the more assets pump. Nice and simple. Okay. So what if liquidity looks like it's going to return, money looks like it's going to return, why do we think there's going to be a crash, right? And there's a bunch of different reasons why. One is because the commercial real estate sector is suffering so hard after COVID that the banks have massive debts due, and the commercial real estate owners are not able to pay their debts to the bank. So there's a disconnect there, that there's potentially a commercial real estate collapse that's on the horizon. So that could play out before the end of this year. But again, nobody knows, including me. But that's definitely something on the horizon that could cause a banking crisis, which would, one, be the crash, but then it also becomes the excuse for them to print money and dump it into the system for this process to play out. But that is a huge indicator that that there's a crash on the way. Here's another viewpoint on it. Remember we said crypto is tied to the technology stocks because it's a technology stock effectively. The technology stocks are tied to the broader stock market, the liquidity of the stock market. So, crypto is like the puddle on the beach. The NASDAQ technology stocks is like the local little area on around the beach. The stock market, the broader stock market, is the sea. And actually behind that, bonds are the real ocean. Bonds are just government debt, corporate debt. They're just promises to pay. So when you're looking at bond yields, this is a representation of the comparison of the 10-year bond yield to the 3-month bond yield, okay? Normally, it should be down here, that the 10-year should be paying you more interest compared to the shorter term bonds, right? Like if I lend money to you for 10 years, you have to pay me more interest than if I lend it to you for 3 months because you're taking less risk. What always happens before recessions is that switches. So the 3 months starts to pay more compared to the 10-year, which means people are more willing to lend you money for 3 months than they are for 10 years because they expect that between 3 months and 10 years, something crazy is going to happen. There's a crash that's going to happen. So in simple terms, that's represented by this red line. right? When the red line gets to these levels, the next is a recession, which are these gray bars, okay? And 1980 was one of the biggest ones, and we had a crash, and you can see the process playing out. This is where we are today. Okay, we are so far above in the signal that's telling us that there's probably a crash on the horizon that we almost have never been that high ever. So a recession is likely to show up, but I don't think this is going to be the big one. I think this is, again, going to be an excuse to print a bunch of money because somebody's got to pay their debts, and we're not going to let the whole market crash because then the whole system blows up. What we're going to do is they're going to print a bunch of money and steal it from the average person and dump it into the system and keep us on this pump crash roller coaster for God knows how long, but at least until 2025, 2026. So when you're also looking at the dollar, because remember, we always say that when the dollar crashes, that money flows into assets. We have seen that since last year, as the dollar's been crashing, that money's been flowing into assets. It hasn't particularly flown into Bitcoin. It's flown into the stock market. The stock market's been on a riot. It's having the best year in the last 20 years, I think, that it's ever had. Bitcoin is not having that, right? So that's also where people who think that all the money just flows into this new world, I don't agree with that, because it flows into the safest asset first, which is a stock market. But my point is that as the dollar's been crashing, the money's been flowing into safe asset like stocks. And now what we're seeing is the dollar's actually gone below a level that it hasn't been for a very long period of time. Okay, like this level, we've never seen the dollar below this since back in 2001. That is 2001, 2003. I can't see it properly. You can see it more better than I can see it. My point is, when the dollar breaks below this level, a lot of analysts are now starting to point out that the dollar is at a weak point, and once it's below that level, it's going to be difficult for it to get above. Could it? Definitely. If it stays below this level and it keeps going lower, then we have the real pump into crypto, and that could go all the way out into 2024. That's a great sign, because now the dollar is becoming as worthless as it's always been. You know, it's 96% lower value than it was when it launched. But now in this process is the collapse of the dollar, which then adds strength to things like the crypto markets themselves. So these are just the very macro type viewpoints. We're going to start going into indicators and analysis and a lot of stuff going forth. But this all is pointing towards that the fact that there are good times ahead, that there's still probably some pain ahead, but remember, that's the pain is when we want to buy. And we have a lot of confirmation that the world is shifting in a way that there's more money printing coming forward. So now, going back to this chart of ours, the psychology chart, what everybody always tries to do is they try to buy the very bottom of this, right? Depression, right in the middle of everything. You don't realize that you're there. Like, did anybody realize that we were there? If this past little bit was it? You have to wait it out and actually get to the point where you know you have confirmation that you are at a point where we're starting to be on the other side of the hill. Where we are today, it looks like it is likely to be on this uptick on the other side. There's 1,000 other things that we're going to go through later on that are going to show that. But it looks like we are in the spring phase where we've come off at the bottom. Could we go back and have another dip like you're seeing here, right? Yes, definitely. But even with that, who cares? The whole point is to just buy down in this zone, right? So if you're somebody who's been buying since middle of October 2022, good on you. Congratulations. If you're somebody who's just been waiting on the sidelines, now's the time to start paying attention. Because if you get in these lower zones and get out in these higher zones and not try to call the top and bottom, there's a lot of value to be had in that process. And again, going back to this chart, it looks like that process is going to play out over 2024 and 2025. So the psychology is in disbelief today, that, you know, a lot of people don't believe that we could recover from here. A lot of people didn't believe from last year. I didn't even believe it. You know, I'm not immune to any of this. I didn't believe that, you know, we wouldn't go lower. But all of a sudden, stock market turned around, it pumped up. Now, what we usually like is we like that confirmation where money returns into the markets. All these new ways of pumping money into the markets become clear, and it starts to point towards a direction that yes, more money is coming, and then you start to actually go through this phase of hope and hopefully get out by the time we get to the thrill phase. My point is, we are somewhere down in this zone, which makes me comfortable with starting to dive into this market. Now, I'm not saying I'm diving in headlong right now. I am starting to analyze the market on a much deeper level. I'm starting to analyze projects themselves, starting to analyze trends in the market, starting to get the capital ready. And, there's a lot of different steps that we're going to go through that you should be having during this time. Now, it looks like there's probably going to be about $10 trillion of market cap that this market's going to go to this time around. I wouldn't be surprised if it hits $10 trillion this between now and like 2025, 2026. Last time we went to 3 trillion. So it's not out of the question. And that much money flowing in at this point would make sense. And this is not just coming from me. Raul Paul is saying the same. Many other analysts are seeing the same. And we've said that for a long time that these things go like that. It goes 300 billion, then a trillion, then 3 billion, then 10 billion. And then, of course, as the currency hyperinflates, 10 trillion, the 10 trillion becomes much more worthless. So the numbers just start to go bananas, right? If I told you it's in rupiah, you'd believe it. But in dollars, it feels a little unbelievable. Now, what's also happened is liquidity has now flown into Bitcoin, right? It flowed into the stock market first. Bitcoin stayed pretty much stationary. Then it flowed from the stock market down to Bitcoin, and it still hasn't gone down the risk curve down to all of the altcoins and all of that stuff. So the next thing that should happen is the altcoin should see a nice kick up. And again, could it happen? Yes. Could it not happen? Sure. Nobody knows for sure, but logically, as the investment goes down the risk curve, we should see that liquidity flow down to altcoins, which will confirm that liquidity has gone through the entire loop, and that will be the next kind of wave, right? But so I'll give you an example from here. So this is looking at 2019, 2020. So we had the crash. This was the point where nobody knew it was the bottom. We see this return. There's excitement, there's exuberance, and then it just goes into this nothing stage. It just goes sideways for a long time and becomes boring. Now that boring phase is where I like to get in, because now there's confirmation that, okay, strength has returned to the markets. Then everybody hates it because they think they're always just backwards looking and they're going, I wish I got in here. I wish I got in here. Whereas this phase is the phase that I like to get in, because there's confirmation that the market has turned a corner, right? And at that point, it's like, yeah, this is $7,000 Bitcoin down to $3,500 Bitcoin. So usually you do get another opportunity to get in during the crisis, but just dollar cost averaging during this time, and even getting in at, I don't know, 7,000, 10,000, and getting out at 40,000, let's say a conservative ride up, is a huge benefit to your portfolio, right? And that way of operating is much lower risk than trying to get in here and always trying to get out there. Because the people who always try to chase getting in here will always not want to get out here, and they will never make money in this process. At least that's my approximation. My point is, after this exuberance returns, it's nice to have this sideways action, which gives us time to analyze, start to enter the market, start to nibble on a lot of different assets, and a crisis looks like it's on the horizon, which then gives us that opportunity to really take a big bite out of the market. And that's what we see now, right? Pump, bottom out process, exuberance returns. It starts to find support above a level that's been resistance for a long time. And even if it was to break down from here, I would be very happy. Is it just going to shoot off from here? It's very unlikely, almost uncertain. But for it to break down from here, or maybe just move sideways around here for a long time, doesn't matter. Either way, I'm happy with it, because that's the time when you start to actually enter the market with confirmation that that we're not just gonna just keep tumbling lower and lower and lower. At the same time, as liquidity is returning to Bitcoin and not returning to the rest of the assets, a lot of the rest of the assets, institutions are getting into this space. So, in this journey that I've had in the last year and a half to 2 years, I've had a inside view on what's going on the actual deployment of blockchain in the world. And I can confirm that governments, institutions, financial asset managers, everybody's pivoting towards this direction. It's now ready for its regulated adoption. And the regulations are the first step in them starting to enter. But many of them have already started to, develop and deploy. Many of the banks have stuff ready to go. The stable coin for Palau was now announced. The one we were talking about a little while back is now announced. Many of those things are actually being executed in the background. So the adoption is happening at an institutional scale. But that also means that they're taking this technology, and finally, blockchain is coming true to its name, and the blocking and the chaining is starting because they're taking control of all of this through regulations and just taking control of the whole space with money. That real world deployment, what I'm excited about in that space is that it's now coming to the real people on the ground. Up until now, it's been technology in the air that's just the Fugazi coins doing something nobody understands. Now we're starting to see, like, at least for me personally, is tokenized mines. Okay, there's physical stuff being pulled out that adds value to people's lives. That makes sense to be something that's worthwhile. Tokenized farms, tokenized farm productivity, tokenized real estate, tokenized AI models, tokenized real world things that impact real people's lives, built in a way where the people don't have to use like crazy wallets and all this technology that makes it completely unusable, that it's going to become built into the framework of the real world stuff that's happening in people's lives. That's what we're seeing today. And I'm building it myself. I'm helping build it. At the same time, great cryptos are like 90 to 99% off still. Okay. So we have Solana, which is right now 90% discounted. And if you're looking at these charts and you're like, these look weird, it's because we're looking at it in logarithmic form. We don't look at things in linear because these are logarithmic growth curves. That's why when they pump 10x, 100x, 1000x, and when they crash 90, 95, 99%. And people have a hard time getting used to it because most people are looking at it like this, right? This is how the human brain works. Oh my God, what a great pump. Oh my God, it's crashed down to zero. It'll never come back. Whereas like logarithmic growth curves are, oh, I went up a bit. That was its first pump. Okay, it's corrected back down to where it is. Now it'll probably go on another crazy run. Who knows? But it's at a 90% discount. Okay, if I told you that when Solana was 200 something dollars that you could get it for $20, you jump on it. So now's the opportunity to start planting your seeds in spring, at least for me. Not financial advice, just financial fundiness. XRP is still at 80% discounts. Even at today's prices, it's at 80% discounts from his all-time high from 2017. It never even made another all-time high in the 2020 run. That was all just lawsuitness. So it's 80% down from his 2017 high. And when these coins go, they go well beyond their previous all-time high. Now, do I think it's going to go $20, $30? No, I think that's ridiculous. But do I think it's going to go above its previous all-time high? Yeah, at some point, it's definitely going to do that. But regardless, it's still at 80% discount that it's on right now. Link, which is a really good coin that I think is going to be part of the new framework, is, what is this? I can't even see it. 86% off? Yeah. Regardless, it's at a massive discount. Everything is at a massive discount. We're always just staring at Bitcoin, right? So we're looking at Bitcoin, and let's see what Bitcoin's at. Even today, Bitcoin is at a 60% discount. I gotta not put these computers so far away. 66% discount. Or I'm not even putting it in the right place. You get the idea, okay? So everything is at a discount. And staring at just Bitcoin doesn't make sense to me. It's like watching gold to try to figure out where the rest of the markets are going to go. There are massive, massive opportunities in this space that people need to capitalize on, okay? And the way I like to look at Bitcoin is like this. It's called the Bitcoin rainbow chart. This is one representation of many different models that look at it like this, but this is a great, beautifully represented way of looking at it. That when it's down in these blue zones, it's a really good idea to enter the market, right? And now you could have gotten in here, could have gotten in here, could have gotten in here. It doesn't matter. If you got it during those times and rode it through the waves, it was always a good opportunity. And we're down in that blue zone right now. And now we have confirmation that liquidity is returning. The broader world is starting to shift. So when everything is pointing towards that direction and we're down in these zones, I personally am happy to buy assets in this space. Am I buying Bitcoin? Not specifically, because I think Bitcoin is partially being manipulated to be where it is, but it being in this range is a signal for the rest of the market. So I will eat my words about what I just said 4 minutes ago, 2 minutes ago. Okay, so looking forward, what is on the horizon? You know about the currency hyperinflation, chaos in the world, sure, and a brighter world coming out the other side. Crypto is now confirmed as the new financial framework of the world by the people who own the financial system. That's first. Secondly, we are looking at the metaverse being launched officially in beginning of 2024 by Apple. When they release their headset, that's when I personally think the deployment of the metaverse starts, which means metaverse plays in the crypto space have so much growth ahead of them. That's why we've been nibbling on them for a long time. I think real world assets are just the biggest opportunity going forward. And I am biased. Yes, I'm an advisor on them. Yes, I'm building them. So don't just take my word for it. Go do your own research. But I think this technology is actually built to carry the value of all of the stuff that we value in the real world in the digital space. And real world asset tokenization is of the future. And it's a wave that's going to be bigger than any wave that I've seen before. And it's going to actually connect real world value to the metaverse. So that's a 2-for-1. Plus, the biggest asset managers in the world, like BlackRock, have confirmed that tokenized securities are going to be the future. Okay, I don't need much more than that. So, metaverse, real world assets, tokenized AI is something I think is going to be huge, because AI itself is here to revolutionize the world more than the internet did. And I know that's a bold claim. Tokenized AIs is the natural way forward of how we share the value that those AIs are generating, right? So tokenized AIs, definitely don't sleep on those. Look into those. And we'll go through a lot of these things and give you deeper analysis and start to download a lot of the information that's in these spaces. And if I find something, I'll share it with you. Obviously, if you invest in it and lose all of your money, that's your fault, because you should not just be listening to this. This is not financial advice. This is not just telling you to buy anything, because you shouldn't just buy anything because I say so. I'm just a human. Listen to your own set of resources, do your own research, create a strategy for yourself in a way that complies with your way of life going forward, and make your own decisions. Independence comes with that responsibility. So, action tasks going forward. Pay attention. Start paying attention to this space, right? We've spoken about how when we're in this crash period, it's good to not pay attention. Now we're in the spring period. That's when we start paying attention, start learning, start looking at what's developing. And because now the joy has returned into the market. Probably a little bit more pain left, but who cares? The joy is confirmed to be returning into the markets. I'm personally starting to gather liquidity, whatever I can. Okay. A lot of people out there are starting to get their ducks in a row, and they're starting to onboard their liquidity, their money, into the systems where they can then invest into crypto. They're getting ready to invest into crypto. At the same time, things like Operation Choke Point 2.0 are blocking, especially Americans, from being able to get their money out of the bank and put it into places where they could invest into crypto. So I think it's wise to actually start to get your money from places where you can't invest in crypto to places you can invest in crypto. Definitely learn about metaverse, real world assets, and tokenized AIs. At least from my viewpoint, those three are value models that are going to be the next hype cycles, the same way DeFi and ICOs were hype cycles in the previous cycles. And for me, I'm preparing to start dollar cost averaging into the market. So you should figure out what plan aligns with you and go with that. But good times are back. The money printing is starting to look like it's showing up. The future looks very bright, and we're going into the most insane opportunity to create generational wealth within the next 3 years, in my humble opinion. Other than that, It's fine. I'm glad we enjoyed the coconuts along the way. I hopefully you spent all of winter increasing your ability to improve your life, increase your earning capacity, and hopefully you spent it snuggled with loved ones because ain't nothing in the world worth more than love. We'll see you next time. Much love.